European stocks have massively trailed US peers each year for more than a decade, until recently. With reforms accelerating and investment rising across the region, will this be Europe's turning point? Europe's stocks enjoyed a brief run of outperformance early in 2025. The question now, could that continue? We examine what's needed for a sustained investment renaissance and where investors are already finding opportunity. For years, Europe's growth was constrained by weak productivity, relatively restrictive fiscal policy, and an incomplete single market in few key sectors. Now, geopolitical and energy shocks have accelerated reform, unlocking investment in defense, infrastructure, and innovation. The European Union has introduced more flexible fiscal rules, enabling more long-term public investment. At the same time, policymakers are seeking to mobilize household savings, including 14 trillion sitting in banks' deposits, into productive investments. The new Savings and Investment Union projects try to support initiatives like the auto-enrollment in pension schemes and the development of new savings accounts. These policy shifts are already creating near-term investment opportunities in defense, utilities, electric power, and grids, as well as in banks, insurance, asset managers, and credit markets. We also see opportunities in mega forces. Two stand out: the energy transition and artificial intelligence. Europe's decarbonization drive and the build-out of AI infrastructure, including European data centers and the energy to power them, are fully in demand for materials, technology, and engineering. Private capital is stepping in to fund this transformation, with European infrastructure funds commanding more than 600 billion in assets, outpacing other regions on the way. We think this momentum can help European equities narrow the performance gap with US peers, and cheaper valuations in Europe can present some attractive entry points. But we stay selective for now. For a broader renaissance, we think more business-friendly economic policy and more developed capital markets are needed. The bottom line is, Europe is moving in the right direction. More is needed for Europe to sustainably outperform the US market. At the same time, progress on reforms and rising investments are reshaping its growth story and creating targeted opportunities where policy, capital, and innovation meet. For investors, it's a moment to stay selective and position for transformation, not just economic cycles.